From Argus Media, this is Fuels Focus, a recap of stories within the U.S. refined products marketplace from the week that was May 26th through the 30th, 2025. July NYMEX WTI finished the week near $61 a barrel on renewed tensions with Russia over the conflict with Ukraine. U.S. President Donald Trump's displaying growing impatience with the Kremlin over the continuing war in Ukraine, but there's still no sign that he's ready to impose new sanctions on Russia. U.S. Atlantic Coast prompt RBOB cash differentials dropped to a nearly one-month low this week on spot demand thinning near monthly expiration. Prompt RBOB cash differentials fell by 13 cents a gallon to June NYMEX flat. It's the lowest since April 29th. Outright prices rose by about a penny and a half to $2.09 a gallon on stronger futures. Bidding interest remained thin ahead of month-end as forward curve backwardation and storage costs discouraged rolling inventories into June. Buckeye and barges were even. U.S. weekly retail motor fuel prices declined last week, falling from multi-week highs reached the week prior. Average retail gasoline slipping to $3.16 a gallon in the week that ended May 26th. That's down about a penny from the previous 6-week high. Diesel prices decreasing across all regions of the country. The national retail price about $3.50 a gallon. That's a decline of about a nickel from the prior week's 5-week high. Year over year, gasoline prices have fallen by 42 cents a gallon, while diesel prices have slipped at a slower pace, about 27 cents a gallon. And Chevron's sanctions waiver allowing it to lift crude cargoes from Venezuela expired this week with no clarity yet on whether the U.S. major could retain a token footprint in the country. Chevron's export authorization issued back in 2022 will not be renewed after it expired, according to the U.S. State Department. Between 2020 and 2022, Chevron held a narrow sanctions waiver allowing it to conduct business maintenance at its joint venture with state-owned PDV. Maintaining that operation allowed Chevron to quickly scale up imports into the U.S. once it received authorization in 2022 to do so. President Donald Trump's first administration in 2020 considered, but ultimately decided against ordering Chevron to permanently shut down its Venezuela operations. U.S. administration officials at that time argued that Chevron's full exit would lead to its assets being seized or taken over by competitors from Russia or China. Chevron's crude loading from Venezuela reached well over 200,000 barrels a day last year. The company stopped lifting crude from its Venezuela joint venture last month. U.S. exports of naphtha to Venezuela also stopped last month, contributing to a decline in Venezuela's production and export levels. And that's all for this edition of Fuels Focus, a production of Argus Media, a leading independent provider of commodity pricing and market information. For more on these stories and others, along with the latest pricing in the marketplace, make sure to subscribe to the daily Argus Media U.S. Products Report.